On my wrist, when I step up on a diamond, 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 diamonds on my wrist. When I step up on
Boom. We are back, ladies and gentlemen. We are live. It's the Freight Coach Morning Show coming to you from Phoenix, Arizona on this beautiful Thursday, the 21st of April today. I got a very special guest. You guys can see the best dressed guy in the room, of course, Mr. Kyle Lintner, joining me today to break down this fucking amazing industry that we operate in. And we're going to break down a couple of articles there. But before we get started, Kyle, I got to give a shout out to some of my sponsors who make all this shit possible for me here, man. First and foremost, my friends over at Bitfreighter, you guys, they are on a mission to create a flat fee for unlimited EDI messaging that is out there. Carriers and brokers alike, you are costing yourself business by not having a digital option to accept tenders from your customers. With their managed EDI platform, it is no longer an expensive and unattainable option for companies who may not have a legacy TMS to utilize for your day-to-day operations. Bitfreighter's managed EDI platform is fully integrated with TMS providers like PCS Software, DAT Keypoint, Revenova, and EasyLoader to provide a seamless transition for all your EDI needs. This levels the playing field for your organization and makes you EDI compliant with your customers through automation. If your customers are requiring you to have EDI capabilities, you now have a seamless and effective tool to utilize in Bitfreighter. If you're ready to learn more, visit www.bitfreighter.com to request a demo today. The ticker's on the bottom. You guys just let them know that the Freight Coach sent you. They're longtime supporters of the show, just like our friends over at VHub, mutual friends of ours there. Kyle, how's everything going today, man?
It's going great, and I cannot believe how amazing you read copy.
Yeah,
I wrote. You do this for a living.
Yeah, I know. It helps that I typed it initially too, so
it always makes it a little easier.
Yeah, if that didn't happen, it would be an absolute struggle.
Somebody else's words are never any good, right?
Yeah, exactly. I mean, I can barely spell my own name sometimes. Thank God for spell check. So, one thing though that we have a mutual connection with is my friends over at VHub, man. I mean, I honestly think that their platform is the future in freight, not just for trucking companies, but for brokerages alike, with the ability to reutilize others' assets to build up an entire book of business out there. I mean, legitimately, you can create a drop trailer pool for your customers based off of that availability that's out there. And, just kind of like a little bit of a live look in today for where they have trailers at. Again, that Wilmington, Illinois area, they got one ways going up to Mississauga and Coteau du Lac, as well as that Glade Springs, Virginia location. They got a bunch of, there's 9 trailers out there that can go up to British Columbia, outside of, Vancouver, just outside of Winnipeg, in Rosser, Manitoba, as well as Edmonton. And it's like, I just think like delivering those is what's key to your customers to help bring a solution that they might not even know that they need yet.
Yeah, I completely agree. I will say that since rates have cooled off a little and things seem to have calmed, the desire from the shipper side to move back to a drop trailer environment is very, very strong. And something like VHub is an obvious no-brainer to it. You can immediately start the pool, whether you're a carrier, a broker, or even if you're the shipper and you'd like to grow it as well. The ability for everybody to connect into that and make that part of your asset offering, it's kind of a total no-brainer.
No, exactly. Because I mean, that's always been the biggest hang up with shippers and brokers is it's like, we don't have any equipment there. We're relying on the quote unquote relationship. And I'm going to use that in air quotes because let's be honest. But again, like this is legitimately a gateway into the door for those large enterprise shippers out there. And then furthermore, like with equipment costs being what it is right now for that power only, that person who's trying to live their American dream, this is a very cost-effective tool for you to utilize in the short term. Because I mean, as you know, in this industry, Kyle, cash is king. All right.
Yeah,
cash is king.
100%. And what if you're trying to live the Canadian dream? It never dawned on me until you just said it, but you mentioned the Wilmington getting back up on Mississauga. Well, if I'm a Canadian carrier and I'm down in the U.S., I'm kind of screwed. I have to go back home. I don't have a choice, right?
Yeah.
If I can go back with nothing behind me, with an empty trailer, from a fuel saving standpoint, that's the Canadian dream, right? Those guys, for better or for worse, almost take whatever they can just to get back.
Yeah. Because
they have to get back. So now if you can do it and get cash with really nothing in the back from a fuel expense savings, another one of those win-wins.
No, absolutely. And, and again, it's like, talking about all that, that's, I think, one of the biggest debt expenses on a trucking company's P&L is essentially for them moving their trucks around to try and find some freight that's
Yep.
out there. And, this is just a way for you to at least reposition your truck, because, I mean, obviously for a lot of you out there who are listening to this that don't know, the reality is most Canadian carriers do not have authority to operate in the US. That's why they can't pick up more than one load that has to go directly back to Canada. If they had US authority, they could, bounce around in the States for a couple of days, but like the overwhelming majority of them just don't have that.
Right. It's one of those interesting. Is it part of the Jones Act, or is it just another act similar to it? We're getting into the weeds here.
I know we really are. Before we break down our 3 articles for today, did you know we're on day 9 in the Freight Coach Morning Show tally that there's still a truck parking issue in this industry? Just throwing that out there. We're doing this every day until there's actual meaningful shit done about it. Cause I think the problem with social media and a lot of things is it's only trendy to talk about shit when it can get you some vanity metrics, get those likes and, and all that other bullshit. So I'm just bringing up that awareness every single day. We're also on day 9 of there being facilities out there where drivers can't even use a bathroom at. And, it's something, again, that I see both sides of the fence. I understand why a facility might not want to allow that, because clearly something probably happened that made them remove that. But hey, what can we do to be better here? That's what it's all about. It's about that progress. A lot of the drivers that I talk to, they know that, their peers and even themselves sometimes need to step it up and change their ways out there. So.
Yeah, it's frustrating because if you think about just the bathroom issue alone, if you were a visitor, a guest, or a customer of that facility and walked in, they'd let you use the restroom.
Yeah.
And obviously the employees can. But why is it someone that's bringing goods to your facility that's actually helping you not allowed to? And then we wonder why we have a driver retention issue.
Yes. It's there. It is those little things, man, because it's like if you were a pilot in an airline and then they're like, oh, hey, you're on a 10-hour flight, but you can't use the bathroom once. Like, what the fuck are you going to do?
Yeah, I'm probably not going to be a pilot, or I'm going to go somewhere else where I know the facilities I visit let me go to the bathroom.
Yeah, too. That's exactly it. All right. So the first article, pretty big news that dropped overnight about from our friends over at the Wall Street Journal. So I do a really good job of citing my sources, Kyle, because my English teacher in high school beat that into me, not physically, but mentally beat it into me, the importance of doing it. So breaking news from the Wall Street Journal: digital freight broker Convoy weighs potential IPO after hitting $3.8 billion valuation overnight. The startup raised $160 million along with a new line of credit and a loan backing that it says it will boost hiring and expanded freight services. What's your initial thoughts on that?
Wow
is right. So the article comes out, that they raised 160 new funding. And here's something that I wanted to ask you about, because I know you have a background in finance and everything. When they say that they, let's see, where was it? It was, also secured $150 million line of credit from JP Morgan, and then $100 million loan. Where was it? It was like the debt portion of it where they were able to reduce some of their debt. Like, how do they, like, when they say financing debt or something like that, like, what does that mean?
Restructuring the terms of it. So they have a loan, it's got repayment terms of whatever.
Yeah.
They borrow, it's refinancing your house.
Okay. Okay.
That's basically what they did. They restructured their debt, whatever it was, probably pushed it out longer at a lower rate.
Okay.
Maybe they bought some of it down with some of the new money that they were given.
Okay.
I doubt that, considering that the rest of the article talks about the growth that will be attributed to this new round of funding. So hard to think that they're paying down debt, probably pushed out the terms on it to use the new money that they have as collateral against it, even though that new money will be used to hire employees, build technology.
Because it's,
the one line in that article that really stood out to me was that this will deliver the path to profitability.
Yeah.
So I just don't understand how we continue to value companies at such higher and higher levels that are not profitable yet. And I understand it is all about the long-term play, and I understand it is all about growth, and that we're going to get to the point where they have such market share and they are now able to leverage that by increasing either their cost to the customers or pushing down their expenses on their side. And that's where the margins will become positive. But I struggle with that thought inside of freight, considering that every single year your business is up for rebid.
Yeah.
I know they have some tech that embeds pricing, so they get some probably a larger share of spot opportunities than other competitors. But if 20% of the marketplace goes to brokerages to begin with, so 80% of the business goes to asset players, now the non-assets are struggling for the 20%. Out of that 20%, somewhere between 80 and 90 is also, again, contract business. So
yeah,
out of the 20, another 10 is what's available for pure spot. And that's what, in a total addressable market, what are we going to say? Convoy is going to get all of that, and that's somehow how they're going to turn positive. I mean, if you take that valuation, that would assume in every other brokerage that is profitable that they have a year their average annual take is somewhere between 300 and 400 million.
Yeah.
And we find out that it's still negative. So I'm not going to say I'm surprised, because we have other Stuber rates and other companies I won't name that are doing the same kind of a thing. But you look at CH, that's valued at 12 or 13 billion on $1 billion in annual earnings.
Yeah.
Okay. But here's a company that's not profitable, and it's going to be worth a quarter of that.
Yeah. And that's what it is to me, is because it's also like another thing that really stuck out to me, Kyle, in the article, was the fact that U.S. digital freight, like, I love how they're putting digital freight brokers. It's almost like they're trying to separate themselves from the actual freight brokers for a reason, And I think, like, I don't know Wall Street. I'm learning about all of this stuff kind of as I go. I'm trying to educate myself as much as possible. But what stuck out to me is that digital brokerages raised $1 billion in VC funding, or excuse me, venture funding, in 2021, up from 602 million in 2020. Like, that's $1.6 billion in the last 24 months have been raised by venture funds into the digital space. And I don't know if that's like an all-encompassing thing for other services that are out there that aren't technically freight brokerages, but they're offering a digital service. So I don't know, like, how they kind of lump all that shit together.
Yeah.
But it was like, because, like, again, it's like, I feel like a freight broker to me, because, like, one thing that I thought was kind of cool, though, in the article was to kind of, about like what VHub is doing and everything, that, like, with the asset reutilization and everything, that Convoy's trying to do like a drop and hook model. But from what I saw in there is it's primarily going to be based on shippers who have their own trailers that are looking to run power only, like, exclusively. So again, I like the outside of the box thinking. I like the fact that they're looking at it from a perspective of, hey, we're not just going to be the typical ground and pound old school freight brokerage out there. We're trying to look outside of the box and bring different solutions. But also the drop and hook freight overall is, I don't know how big of a market that technically is, from like what they described in the sense of shippers having their own trailers dedicated to be preloaded, because most of those go to the assets,
Right.
So it's like, the large players like the JB Hunts of the world, the Swifts, they can go drop 75 trailers at any location across the nation. And that's where a lot of that preloaded capacity comes in.
Right. And I know Convoy has decided to add some of their own into it, but you can't build a trailer pool organically overnight. It doesn't exist out there. You can't just go out and snatch 20,000 trailers. To do it on your own is a little difficult. I don't know what separates them from doing that when, the drop and hook thing's already been done. JB Hunt's been doing it for years with a much, much larger pool. And Convoy has, pardon me, I'm a little under the weather. They have, I believe they call it on-demand freight or on-demand pricing. It's basically cost plus.
Okay.
So, they're putting new terms on existing freight. And that's what makes it differentiated. I don't quite buy it. I know the technology is the piece, and that gets lumped into the whole digital component. And anytime an industry, especially one as large as ours, undergoes a transformation into a digital age, that disruption is going to offer that opportunity for companies to make a significant amount of money. And that's what everybody's betting on with companies like Convoy. But I struggle to see those multiples, in the sense that for them to get that repeatable business that they rely on, every broker worth their salt runs contract business. In order to do that, every single year, you have to re-compete with everybody else to get those lane awards. And if they're not winning that, or if in order to win it, have to put it at rates that are not coverable, the path to profitability is one that they'll never see. So digital or non-digital, this is still freight. As a broker, you have to match the demand to the capacity. And there are a lot of other companies that are doing it in the non-digital way that are making a lot more money than zero or negative.
That's true. I mean, like you mentioned, C.H. Robinson, they're $14 billion.
Sure.
All right. Samantha Bass, what's up? Thank you for joining us a little bit earlier today. I know we'll be back to our normal scheduled time tomorrow. Again, as a person who's starting a company, multiple companies up and going for it, I had preset event at the normal time for the show, and I refuse to change just because I'm doing something different for, so it's like, it's just easier for me to do this little bit of a change. We'll be back to the normal time tomorrow, 8:30 Pacific, 10:30 Central. That article right there about our digital freight broker Convoy is on wallstreetjournal.com. Check it out there. This is a perfect segue, I think, into our second article that we're going to cover from Freight Waves. And that was about the freight pullback isn't making used Class 8 trucks any cheaper. So it kind of starts off by saying the recent pullback in spot freight rates isn't affecting the sky high prices of Class 8 used trucks. Some higher mileage models sold for less in March, but the undersupply of equipment shows no sign of easing. Any downward movement in the tender rejection rate since February hasn't correlated to a change in the used truck pricing. Chris Visser, commercial vehicles senior analyst and product manager at JD Power Valuation Services, told FreightWaves. Changes to market conditions usually show up at auction first. Power said he isn't seeing any increased spread between auction and retail sales prices. What has the correlation of the spot market have to do with used truck prices? I don't get that.
It has to do with this. So trucking, for whatever we want to say yes or no, it's a commodity these days. So it's going to be priced as such, and it will be interacted with people as such. Supply and demand will dictate where price goes on that. But also, when we look at something like the used truck cost, you have to view it like a commodity, which means what are the input costs? Yeah. Which would be, well, part of it would be the asset. So whether that was used or new, what did you pay for the truck and the tractor or the trailer? The driver paid the insurance. I mean, all of these cost components to run the truck need to be less than what's received to run that, to operate that truck, which would be spot rates, or they could be contract rates. The reason spot rates get all the publicity is because they're more volatile. Recently, they've been more expensive. But if we think about it specifically for used trucks too, it's probably better to talk spot than contract, because the people that are buying used trucks are not the enterprise level, whether they're the individual owner op or it's a small fleet. Those companies tend not to be able to run contract rates for large companies. They're subject to broker loads, and broker loads means they're receiving whatever the spot rate is, because it doesn't matter if that broker is running spot or contract. When that broker goes to cover it, when he's purchasing capacity, he's purchasing it at a spot market rate. So we can look at spot market rates and gauge where somebody's going to get their money, how much money they're going to get versus how much is costing them to run that company, which one of the components would be the used truck prices. I think the important takeaway in all of this is that if the used truck market is still very, very strong, which it obviously is, it was down 0.1% from February, and the year-over-year comps are through the roof. Nobody sets out to run a business that doesn't make money. Yeah. So a little bit of this is forward-looking versus back-looking, in the sense that, hey, things have been good. Let me go buy that truck. Obviously, someone buying it can't predict the future. They don't know where spot rates are going to be and how long they're going to remain elevated. But as it stands right now, spot rates are still around 45 cents higher than the operational cost to run a truck for a small fleet or for an individual owner up. So it's still 40 something cents of pure profit every time you run the truck. Until that spread narrows more, there's no reason for the used truck prices to come down. There's also no reason to think that spot markets are going to plummet, because in a weird twist, if those rates drop or get too close to where that cost to run a truck is, which is about $1.76, you'll start to lose that capacity, and that decrease in capacity won't be able to meet the level of demand that we have, which then pushes price back up. a little bit of this is circular and somewhat chicken and egg, but used truck prices are a good proxy for the strength of the freight market, in the sense that if this were another commodity, that, you know, a good analogy would be something like corn. Let's say this is corn. This is the cost for seed and fertilizer.
Yeah.
So that farmer's not going to spend more on seed and fertilizer than he's going to receive to sell that corn. The two go back and forth. It's the buy versus the sell, and the spread in between is what's kept. So from a market standpoint, to see these sales remain strong, you know, April will be a key one to watch. I don't see how the spot market goes much lower than where it's at. I think we're probably damn near the floor.
Yeah, I'm right there with you. I think that. So I had my friends over at Thank God for Trucking. They're a small trucking outfit, and so they actually polled 25 of their peers. Samantha Jones, what's up? See, I got the Samanthas in the audience today. Samantha Jones and Samantha Bass are out here. Thanks for joining early today. But my friends over at Thank God for Trucking, he actually took it upon himself to poll 25 of his industry peers that have similar size fleets that are out there. And the average break-even point for their trucking companies, which was 20 trucks or less, was $11.25 a day is what it costs to run the truck at a complete break-even, $1,125. So if you average in about 550-mile run of what they can get in a day, it's about $2.04 per mile is what they need to break even at right now. And like, what was the spot market sitting at, like 250, 260?
That's with fuel. So strip out fuel, we are at 221.
Yeah. Okay. So perfect. So without fuel, and that was another thing too that I was talking about yesterday.
So when those guys did the calculation, did they include fuel or no?
I didn't ask that.
Okay.
I want to say yes, that could have been including fuel.
Sounds about it. Fuel.
Yeah. Because it was, yeah, man, but it was just one of those things that, again, it's putting those numbers out there. And that's what I love about what my friend Adam Wingfield is doing with all of his business and innovative logistics groups, is he's bringing that information out there. Because again, like it's not our responsibility to teach a company how to be profitable, but it is our responsibility to guide them towards the right way, like the right way of operating and everything else. So it's like, if you're a small fleet out there right now, and you are looking at used equipment, used trucks or used equipment or anything like that that's out there, we need to be, as a broker, harsh reality for all of you brokers listening out there, your product are these trucks. All right. Sure. And it's not the mega fleets, nothing knocking against any mega fleets. I've never worked with a mega fleet in my career. They would not work with us. But what does is the 97% of the industry. So it's like our product is directly affected by the fluctuations of new entrants into the market and not. So for me personally, you guys, again, it's not our responsibility, but how can we keep trucking companies in business? That's the whole point of this show, is keeping the little guy in business and not deterring them from actually coming into this industry. Because like you brought up, Kyle, we don't have a driver shortage. We have a fucking retention issue. We have a retention issue because the odds are stacked against them right away. So it's like bringing a lot of this information to light about the predatory loan practices and all that, like giving people a heads up, because what was missing, in my opinion, over the last 35, 40 years is fucking information. All right. And practical information that isn't a narrative behind selling something, you know? And again, it's like, we need to be highlighting the companies that are doing the right thing out there. And again, any truck driver out there who's listening to this right now, reach out to me if you want to be a part of this. I would love to have you on here. I would love to put you in connection with some of the people that are out there bettering the industry to try and make you a more profitable operation, because we need to fucking put our swords down with all this bullshit, and we need to work together to progress this industry. Because with the average age of a driver sitting at 49 years old, we're going to have a real problem in about 10 years if we don't do something about it today. We can't wait for 10 years to all of a sudden say, holy shit, we don't have trucks anymore.
Yeah, you know, I completely agree with everything that you just said. And it just took us 23 minutes for the first F-bomb.
Yes. Fuck. Oh, there's the second one. There we go.
Well, now we're on pace, but 23 minutes. Jeez, that's so late in the game.
I know that is.
So a lot of the things that you said, it made complete sense, and it couldn't help me from thinking that we talk about differentiating earlier in the day when we were talking about Convoy and the digital aspect. If you're a non-asset player, if you're a brokerage, you know, they do such a great job of focusing on the transaction component, servicing the shipper. What is it we can do to get better with our customers? How can we make these transactions more seamless, and everything from quoting it to covering it to the billing and everything in between? Nobody ever does anything on the other side of that transaction. Nobody ever talks about the truck side of it. And you pointed it out, man, 97% of the companies out there have 20 or less trucks. Why aren't there any brokerages that have a tool to come to the guy and say, look, I'm not going to tell you how to run your business, but here are the calculators to figure out your input costs. Here are our available loads. If you want to run with us, this is how you can figure out what your revenue is going to be. You figure out your expense side of it. We'll be your partner in this together. We're already trying to give you as many loads as possible. Let's help you run your business. That's a true partnership. And that's I'm on the Jolly Show. So that's kind of shit that any brokerage will do for the shipper, right? In a heartbeat. Sure. None of them do it for the other side of it.
And that, the thing is, our trucks are our customers too. No matter how I know we pay them. I get that. But again,
they're doing a service for you.
Are you going to have fucking air load 40,000 pounds of bottled beverage? Yeah. You know what I mean? That's a great business idea right there, Kyle, for any aspiring entrepreneur that's out there right now, or hell, if you're the owner of a freight brokerage, what can you do to provide the data? Just knowing based off of generalities on what it costs to run a truck, to have something up there for a trucking company, a small fleet, 20 truck or less operation, to input their numbers up there about, you could even expand it out to a unit by unit basis for them, because financing comes at different levels with the smaller fleets. They can't mass order 100 trucks, so they're buying 3 trucks here at say 3% interest, just an example. Don't fucking hold me to that number. And then they buy 4 more trucks at 8% interest for whatever reason, inflation. Now, all of a sudden, they have different financing on different break-even points that are out there. So put that and tie it to a per-unit basis. And then as a freight broker out there, and I know there's a really big freight broker watching this right now because they're in the comments, might be a good add-on for you guys over there. And I know you guys have the bandwidth to take care of something like that. But it's one of those things, like, way to never have a capacity crunch in your fucking life, because you have a buy-in from that market right there. And then it breeds that transparency. Again, I'm a capitalist. I love making money. I'm not going to say brokers don't deserve to make money, because brokers do deserve to make money in this transaction. But again, you want to talk about retention for a driver, knowing that, hey, this carrier or this broker out there is actually concerned about my overall business. Talk about buy-in right there. Talk about, they're going to work with you long-term. That's where the most success I ever found as a freight broker is only working with a handful of carriers and working with them, not against them.
1,000%. The less time you have to spend covering the load, the more time you can spend quoting others. And you can't do that if you don't have consistency in your carrier. And, you hit the nail on the head, though. The reason why this doesn't happen, the key word in there was transparency. Yeah. Because all of that would require the brokers being upfront and honest about what they're doing. And I don't think there's a person in freight who says brokerages shouldn't make money. Nobody says any of that.
Yeah.
Their margins average 15%. Fine. Here it is. Here's what we're receiving on the load. Yeah. We have 15% of this. The rest is yours. I think every participant would sign up for that. I know the shippers would, because then the shippers could run cost plus without any hesitation. And then every carrier would love to do it, because they'd actually know what they're receiving and not getting $2,000 when the load's got 5 in it.
Yeah. No, for sure. And it's like, essentially, I'm just fucking a travel agent at that point, hey, you're just using me. I make my cut and I organize everything else, but everybody's happy and everybody makes money. I know that's a hunky-dory fucking kumbaya situation that probably is a ways away. But again, that is a very probable outcome that you can take to build out your freight net. Because again, I've been talking about this a lot, and I talk to this directly with all of my clients. You need to create your own market. All right. There is contracted freight that accumulates for 80%. 80% of the market is contracted rates. 20% is spot market, So again, who's got control over that? But a real market indicator is the fact that you can take your lanes that you are running. And this is hard. All right. And again, this is not easy to do this, but you can build it up on a lane by lane basis with your shippers, because a lot of that data that's out there right now is enterprise shippers, the ones who are moving a fucking 1,000 loads a day out of a certain location, for example. How many mom and pop shippers are out there that don't have their information that's out there, that are underserved? That's where you can go and you can legitimately build a freight matrix that's out there. You call it a co-op. I'm from Northern Wisconsin. We got co-ops fucking all over the place. But, you can have a co-op out there with a handful of carriers where you can run consistent freight. You can break it down on a quarter-by-quarter basis, and you remove yourself from the volatility of the spot market. And you can even be cheaper than contracted freight long-term on this. It's hard. That's why people don't do it, because it's easier just to fucking click post on a load board and say, I'll find you a rate. All right.
Yep.
Think outside the box. You want to sustain through all of this shit. Think outside of the box, because there are some shit that's out there right now that are some very real fucking factors that can put people out of business. But talk about situations like this with your carrier partners and your customers alike. And guess what they both want? Consistency. That's the hardest fucking thing to do because you get incentivized to make money on shipments. And I get that. Again, I love making money. But as a business owner now, as a small business especially, I got to think, how do I make money out of the next 12 months, not the next 12 fucking minutes? And that's what it equates to when you roll on the spot market day in and day out. Renee Johnson has a question for you. What would you say the facts that the driver... Hold on a second. My brain works faster than my mouth sometimes, which is saying a lot. Kyle, what would you say that the facts that the driver are many the same for like 50 years or more?
I would say that it's probably like many other things in life that fall into the Pareto distribution, which is that those drivers, you've got however many of them that are doing it for a lifetime and they're in for 40 or 50 years. And then you've got a bunch of other people that do it for 1 or 2. If you've made it past year 3 or 4, you're probably the person that ends up for 50.
Yeah. If you're
the one that's figured out where to go to the bathroom all the time.
Yeah. Samantha Jones. Yeah. Common sense. It's fucking not so common sometimes, Samantha Jones. Shout from the mountaintop. I'm trying. The idea that you should take advantage of carriers while freight is low and carriers should take advantage while brokers when the cap is low is why the industry is more toxic than others. It's very true. Again, I think like, hey, listen, yesterday fucking happened. All right. If you want like, and I've been mentioning this a lot. If you want this industry to change, be the change that you want. All right. Be the broker that carriers want to work with. And ironically, you're going to be the broker that shippers want to work with at that point. It's that fucking simple, you guys. But again, yes, this industry is complex. Yes, there are a lot of outside factors that kind of throw some wrenches in some shit. But you want to know what solves everything? Fucking communication. All right? Pick up the phone and do something about it, and don't be fucking scared.
It's
Luis. Yeah, go ahead.
I was going to say, it's crazy. It just 70% of all transactions are between broker and carrier are one-offs, meaning it's not a repeat customer.
That should make you
back
sick
and forth.
As a broker,
and it's so counterproductive because everybody wants to chase those huge monster rips from both sides. You know, the broker wants, I paid nothing for this truck and I got so much for it. And the truck is looking for the highest paying spot load. And what both of them ignore is the amount of time that's required to go into that. Doesn't offset if you took less time to do 3 loads that paid a little less. The cumulative total on that far exceeds the waterfall of, hey, I got this one. And everyone's hunting for the big fish. Everyone else ignores all the medium-sized fish out there.
I know. Guess what? The medium-sized fish are a hell of a lot easier to work with too. Because, you know, here's the thing, you guys, harsh reality of a lot of these large enterprise shippers that you guys want to work with. They need millions and millions of dollars a month in credit extended to them to operate on. Okay. This is something that a lot of people aren't going to talk about, but fuck it. You know what? We're talking about it here. Service is obviously a part of it, but they need lots of money. All right. I worked for a large freight brokerage for a very long time. Millions of dollars a month were extended in credit to a handful of those large enterprise shippers that you guys all want to work with. And don't get me wrong, it's fucking great when you get 50 loads a day from one shipper. It is phenomenal, but it is very expensive. There is a massive underserved market of this industry that is the small to mid-sized shippers. It ain't sexy. It's fucking Reno, Oklahoma to nobody cares, Nebraska. No offense to any of my friends out there from Nebraska, but you know what I mean. We're all from the Midwest. But, you know, that's the thing is it's like there's a lot of money to be made out there in those shippers. And guess what? You don't have a lot of fucking hoops to jump through to work with them if you can execute.
There's a Reno, Oklahoma?
There is, literally. I only knew that because I lived in Reno, Nevada, and I had somebody ask once, oh, do you know there's Reno, Oklahoma? I'm like, no, I didn't, but thanks. I do now. Let me see here. Renee Johnson, and you know, we're a couple minutes over. I don't care. It's my show. We can do it how we want.
I've got
Renee,
nowhere else to be.
Yeah, I love it. So question for both you guys, not including the capital, how would one build a freight company from the ground up? Shit. So if we're talking about a freight brokerage, at the end of the day, I work for a pure startup from our last employer. Shout out to my best friend, Mitch Wilbert. He's the owner of Unicron Logistics. We literally started on Excel spreadsheets and Google. All right. That's what we had. We built up our lead list based off of that. We knew we were very niche specific when we were building this up. So like the last 4 years that I brokered freight, it was all open deck and it was all heavy haul. I hyper focused it down to a specific region. So I only called shippers that originated in a 800-900 mile triangle, we'll call it. And that's all I did. And I really only focused on freight running inside of that triangle. There were a lot of open deck carriers that ran Reno, Vegas, Phoenix, LA, back up to Reno in kind of that matrix. So look at it that way. Start small. Do not chase freight markets. That is where you find yourself in trouble. That is where everybody races to the bottom in the spot market. All right. I'm dead serious. The spot market is volatile because everybody fucking races to the bottom in that. If you go up there, so produce season is popping. Dan the Road driver, he's out there right now. He's my number one produce driver out in Florida. Why are you watching this, Dan? Aren't you on fucking vacation? I thought you were going home. But again, it's one of those things, you guys, that when the market's hot, everybody chases the market. And guess what that does? You have 17 brokers posting the same 4 fucking lanes out of Florida. And guess what happens? You start increasing those rates to try and get the capacity, and you're buying a truck at that point. What happens? All of your profit margin goes away. The carriers benefit from it, which is great because they're sitting back and seeing everybody creeping up their rates. But again, stop chasing freight markets. Develop your own market. It's in a niche. It's not as sexy at all. But guess what? There's consistency there. How many of you out there know that there's at least 50 to 75 flatbed loads that move between Reno and Las Vegas every single day? 50 to 75 originating in either city, going in either direction. There's a lot of fucking freight that's out there, you guys. And we get caught up in it where we're like, oh, shiny ball syndrome. And I have shiny ball syndrome. Obviously, look at me talk. But again, it's one of those things that you have to develop out that niche. I mean, I had the pleasure of talking to Dan Rowe, the driver out there. And he told me everything that he's done over his career and what made him successful. And it was eerily similar to what my dad did as an owner operator. He ran very fucking specific lanes. Yep. Okay. And that's where they made their money.
Yep. You bring up the shiny ball syndrome. And what kills me is it's okay to go into a market that's hot to get that high rate, but don't go there until you know what your next destination is.
Yeah.
Where are you going after that? If you when LA gets hot and everybody races into LA, all right, are you going to Chicago? Are you going to Dallas? Wherever you're going, tell me. And then what's the load you're taking out of that? Because if you're going to go into LA and leave it, you better not end up in a destination that pays $1 a mile getting out.
Yeah. Yeah, that's exactly it. My computer froze, Kyle. Again, I'm like, I'm learning I don't know a lot about this stuff.
You're gonna have to get no Excel. We'll have to go straight to the paper spreadsheets right now.
I know that's exactly it. I might have to. That's about where my tech budget is now. I'm just playing. Here we go. We're pretty much that's it for time for today, you guys. I appreciate you all joining in. There's a lot of people in the comments. Thank you all for coming in. We're going to be back at that same time tomorrow. Again, I'm trying to build my stuff up. I had a preset appointment and I don't change appointments on people. So we're going to kind of sign this off right now. Shout out to my friends over at VHub. They're the ones who are making this live show possible. Kyle, how can anybody find out to you?
Best place, probably LinkedIn. I seem to hang out there often enough.
He does hang out there a lot. I love it. You guys, thank you all so much. I got to try and find out how to end this broadcast, Kyle, because it's not like my screen's not.
Pull the plug out of the wall.
I'm going to right now. I'll be right back. Now, working in startup world right here. I don't know if anybody can even hear me still. Oh, you're still here.
No video, just audio.
Oh, boom. We're back. No, we're back. I got everything up and running. My camera's going to connect here soon. Shout out everybody. I'm going to end this right now. Thank you all for tuning in. We'll be back at our normal time tomorrow, which is 8:30 Pacific. Oh, I'm going to start the camera. That was my problem. See, guys, I'm figuring all this out. It's so much easier in life, Kyle, when you just fucking admit that shit happens and you just roll with it. It's so much easier to go through life. We'll be back at our normal time tomorrow, guys, 8:30 a.m. Pacific, 10:30 Central, to break down some more industry articles. Thank you guys all so much for your support. It truly means the world that you guys take the time to come out and listen to me shoot the shit with you guys every single day. I appreciate you.